Lyric should focus on creativity, collaboration, and the joy of building something meaningful together. Use vibrant, energetic language to match the mood.
Hello, crypto fans. How are you? How are you enjoying this music? It's called the crypto mood. The crypto mood. Are you in the crypto mood today? Let me know in the chat. Let me know in the chat. We have a lot to cover today, and I'm very excited to tell you about what the whales do in crypto. Yes, Andrea is excited. All right, let's talk about crypto whales. You see the crypto whale here on the screen. And essentially, a crypto whale is a person or an institution who has quite large amounts of crypto. And because they have these large amounts, they can be a little bit more aggressively speculative, and they can also do something which is very powerful, and that is not care too much about small movements. And that puts them at an advantage because they can quite literally have more patience, but they can also manipulate the market sometimes and take your money because you are their exit liquidity. And essentially, that's what we're trying to understand today. What is that? And how can you also avoid it? How can you not care about the small movements, the small ups and downs, but potentially even benefit from it? If that sounds good to you, give me a like, subscribe, and also share this video with someone who might benefit. We are going to get this show on the road here in just a moment. Where's my fancy intro? Here we go. Definitely also put your questions in the chat if you have any. By the way, if you want to become a Crypto Alliance member, you need to go to the landing page crypto.lifestyle, and I have a very, very, very nice free thank you video ready for you. But yeah, what do I have here today? I have some assets in front of me, and I'll show you in a moment what they are. So this is a gold coin. Okay, gotta take away the blur so you can actually see it. There we go. Okay, so this is a gold coin. Yep. That is a standard of holding value. What's really interesting about this gold coin is that my grandfather, who sadly passed away, but he was an amazing man and he always thought about the future. So he bought this gold coin probably when gold was trading around, I would guess, $1,000 per ounce. So right now we're around 3,000, I believe, right? But he was very wise because I still have the coin and I still have the value. So you see the importance of storing value. Next, of course, is silver. This is silver, okay? This is 1 kilogram of silver. And this as well stores value. But I have to admit to you, you have to be able to mint this coin or buy this bar. It's quite heavy. And of course, what is a way better way to store value these days is the Bitcoin, okay? So this is a Bitcoin, of course, is a minted Bitcoin, is not a real Bitcoin. It's also gold and Bitcoin. But truly, where the Bitcoin is here on this device. That's where my Bitcoin is. Okay. And that's the power of understanding how we progress in time, going from stores of value that really are thousands of years old, gold. And then, of course, we have silver, but now is all about the Bitcoin. And that's what these Bitcoin whales do. They accumulate as much Bitcoin as humanly possible. And you should want to do that too. But before I'm going to show you a few charts, I will actually show you what is kind of the strategy that Bitcoin whales use. So as you know, in the cycles of the markets, we have the bull phase and the bear phase. And when Bitcoin goes up in value, that is called the bull. And when Bitcoin has reached kind of the top of the cycle, or at least the whales think that we are nearing to the cycle, the whales want to take profit. And they typically do that through altcoins. They don't immediately rotate, we call that rotation. They don't immediately rotate into stable coins. They first rotate into altcoins because they hope for that last pump, okay? Because it essentially what the Bitcoin whales can do is when they take their profits into altcoins, the value, they already own the coin, and now the small investor looks at the charts and they say, oh, wow, the altcoins are now rallying. So they buy the altcoins, whereas the whale is already in, and that drives up the price of the altcoin. And that's what makes the small investor, the retail trader, exit liquidity, because as those altcoins climb in value, the whales slowly now go into stable coins. And that is, by the way, a good way to follow the market cycles. You see Bitcoin go up, then we come into altcoin season. And then when altcoin season is over, we see the biggest strength, the biggest dominance in stable coins. That's very important to really follow that. I'm going to show you the charts. There's a Bitcoin dominance chart and a stablecoin chart, which measures the dominance as well. And that way you can kind of have a gauge at where we are at in the cycle. And understanding that is very, very important. So we have a question from Nanya Business. This time I won't say Nunya again. Last time I said Nunya, but it's Nanya Business. So this is a hardware wallet. Okay, it's called Ledger, and essentially it is not connected to the internet, which is what makes it very, very safe for your large holdings. So that's what that is. If I have recommendations for wallets, I typically only recommend what I use myself. There are many brands on the market. This brand is the Ledger wallet, and that's what I use for myself. Works fine for me. So put your questions in the chat. You're learning very important things today that really, quite frankly, if you understand this, you understand more than most of the people out there, 100%. Just understanding this phase where Bitcoin grows, and then we rotate into altcoins, and then we look at stable coins. Understanding that process is very important. And I today will also tell you about a very, very special thing that I employ to make money no matter what, just based on those transactions, right? Based on the whales going from Bitcoin to altcoins and from altcoins to stable coins. Each time that happens, we have transactions happen in the marketplace, and you are able to fund that marketplace. So that is known as providing liquidity to the marketplace. By the way, if you want to know, it's really not easy. It's a lot to learn. But if you want to learn that live with me on a Zoom call, I'm going to offer that for free this Monday. So you gotta, it's soon. You gotta free up your schedule. Go to the address crypto.lifestyle and look for a green button at the top. You register there, and it sends you all the information to join me live on a Zoom call this coming Monday. Okay, so Marshall is already super excited for that call. Usually when you have about 100 people sign up for a call like that, 20 will show on average. But I know this time that Marshall is one of the 20%, and you should probably also plan to be there. Honestly, I give away a lot of value on that call, so you don't want to miss out on that. Now let's go and look at the charts. As I told you, it's very important to always understand the charts. So definitely going to look at the charts with you, enter your screen, and we're going to share this screen here. Okay. So don't pay attention to the left-hand side just yet. I'm going to use this black space here to show you a few things. And essentially, what I want to do with you is I want to basically have a visual on this concept of altcoin and Bitcoin and so on and so forth. Okay, so we have first, what we all want in a bull cycle is for the father of all coins to grow in value, and that is Bitcoin. Okay, so the father of all coins is Bitcoin, and we essentially all wait for it to climb up in value. As I told you, once the whales think that we have reached the top of the cycle, and don't forget, the whales are very smart individuals, often also institutions who have lots of experience, lots of data points, lots of insider knowledge sometimes that you and I don't necessarily have. Well, you can have it, and I usually have it because I spend loads of time investigating the markets. And if you join my community, you'll definitely have access to that as well. So once Bitcoin kind of gets close to the top, then what the whales do is they first go into alternative coins. And that is often known as the Altseason. And I told you the reason they do this is because it's a way for them to take profits in their Bitcoin investments and go for a second ride. Okay, because what happens is that the second ride, when they buy the altcoins, those start to wake up, and then once they really have gained some momentum, then the retail trader, which is the small trader, says, oh, I see these green candles, let me now buy that altcoin as well. But by the time the retail trader has kind of realized that the whale is already busy taking profits for the second time, and they go into the stables now. Okay, so that is a cycle that can happen multiple times throughout a bull run on a small scale, but really on a large scale, on a very high time frame, this is what's going on. And if you understand this, essentially, and you want to be an investor, this is the game plan, right? You want to get in as low as possible in Bitcoin. When it's reaching the top, then you want to rotate into altcoins. And then when the altcoins reach the top, you want to rotate into stables. So you want to do the same, ideally, the same thing than the whales. Now, is that easy? No, of course it's not easy. 80% of traders lose money. Only 20% make money. So you have to be very educated, have to have a lot of time, and you need to be very informed, right, to make that happen. And that is something, by the way, that I provide in a private community that I have. We have lots of people who do their trades. And this is something that was posted just this morning. You see the person said, I followed your advice and bought into these coins. And they basically made 20% on Sui and 28 on Cardano in a short amount of time. So if you're interested in that kind of those kind of opportunities, be part of the, or at least act like the whales, then you know what to do. Go to crypto.lifestyle and get on my mailing list, because once a month I have a larger boot camp where I teach so much, and that's where you want to go. The free masterclass on Monday, however, is different. Okay, we're going to talk about what that is. So back to our chart here. The question that you may have is, well, how can you know when Bitcoin is reaching its peak and when it's time for alt season? And that is something that we can know by looking at the Bitcoin dominance. So I have these market cap indicators here on the left-hand side, and one of those is the Bitcoin dominance. So that's here. And I look at that chart all the time, okay, every day, because it gives me a feeling of when altcoins are going to start being interesting, right? So essentially, what Bitcoin dominance has done in the past, what is this? Ever since really November here, right? When we had the elections, Bitcoin dominance has gone up. And what I'm seeing here, it doesn't have to necessarily mean anything yet. What I'm seeing here is that it has kind of broken this uptrend, right? You see here, it chops sideways, Bitcoin dominance. And that is a sign that maybe, and anytime you have a trend broken, that is a sign that maybe the trend reverses. So if we see this happening, Bitcoin dominance going down, then guess what? Then it's time for altcoin season. That's where the whales start rotating into altcoins. So another way of looking at getting a feel for when the altcoins wake up is you look at the entire crypto market, you subtract Bitcoin and Ethereum, and you compare it to Bitcoin. Okay, that's what this chart here is about, coins versus Bitcoin. So I have this chart here, which does exactly that. What I just explained to you, this is on a daily time frame. And essentially, what you're seeing here is that for a long time, for the longest time really, all the crypto market has been underperforming against Bitcoin. That's why that was a downward trend. But look what happened recently. We have this this move here, and it doesn't quite necessarily have to mean that we have broken the trend just yet, but it is a sign of hope, that, well, not really hope, because I really want Bitcoin to keep going up and up, but it is a sign that we might enter into alt season here, and that is something you always need to look at. Does that make sense? By the way, then remember how I said once alt season is over or is starting to get to dwindle, then whales go into stable coins, and that is that is a chart called the USDT dominance. So that is here, okay? That is this chart. So the USDT dominance as well is on an increasing trajectory, and as it breaks down, or when it breaks down, right? It hasn't even broken this trend yet, but as it does this, then you know that we're getting ready to maybe also be at the end of the bull market altogether. These are things to look at all the time, and they help you kind of gauge where are we at in this whole cycle system. Something I want to show you, by the way, is when you see something like this happening, where the Bitcoin dominance is going sideways a little bit, that means that there are some trade opportunities in alternative coins. And what's really interesting to know is if you are part of the people who take short-term trades, what's really interesting to know is that even within altcoins, there is this hierarchy where it first goes into the more known altcoins, the money, right? The rotation first goes into the more known alternative coins, such as Dogecoin, because Dogecoin is a coin that everybody knows because of Elon Musk and so on and so forth. But even within that realm, there are like secondary and tertiary altcoins. And that, if you understand that hierarchy, that's very, very cool, because you can use it. You can use the first level as an indicator to what might happen on the second level and the third level. Okay, and I'm going to show you that right now. So you're going to start looking at where you look at your Bitcoin dominance chart, and you see, oh, okay, something's going on. It's kind of losing this upward trend movement. That means some altcoins are starting to gain steam. Now, if you compare Dogecoin to Bitcoin, I can tell you for sure, if we look at the trend here, you can see Dogecoin broke the trend, and actually quite recently, within the last 3 days, made a nice move, 17% up. Let's see, 17% up. Okay, so now, as I told you, Dogecoin is one of the more known alternative coins. So it is a first level altcoin. One way to make money is to say, well, I missed out on that move. And this is a short-term move, right? That was a 3-day trade. I missed out on that move, but is there potentially another alternative coin that is not as known, but that will soon benefit from this rotation into altcoins? So what you need to do is you need to really know your coins. You need to know which ones are the more known coins and lesser known coins. However, give me a few likes, because I identified before the show a coin that is very likely, no financial advice, you always have to do your own research, of course, but I'm going to take this trade very likely because I believe is next in line. So give me some likes, maybe type in yes in the chat if you want to hear this next coin. So Dogecoin, let's look at it. So this was this chart here shows Dogecoin compared to Bitcoin. Now, if we look at Dogecoin compared to USDT, so to the US dollar, that's the chart. And this move, again, this move is done, right? This was also compared to USDT, a 23% move. By the way, this is how you look at trades. It's still a long-term trade, by the way. It's still a long-term trade because you can go long here, let's say here. Definitely, if it goes under this horizontal here, you would say that's where I put my stop loss. But these are the Fibonacci levels here. So this is still a 3-to-1 risk-reward ratio. So still a long-term trade. Might take several weeks for this to unfold. And of course, crypto always go ups and down. It's not ever a straight line, right? Here we have Wilfred, who says, yes, show me that coin. Okay, so Doge is still a long-term trade. If you also spot trade, which is really what I recommend for beginners to trade spot. Don't do perpetuals because you can get burned pretty fast, although it's a very powerful method. So here it is. Injective. So Dogecoin has this chart. Injective has this chart. So what I want you to see is that the two look very similar. Okay. Actually, let me see if I can put them side by side. That should be possible. So I'm going to put Dogecoin on the right-hand side. And need to go on the daily time frame. And zoom in on this last increase. And then on the left-hand side, I'm going to use injective. Okay, so going to use injective and zoom in on this move here. There we go. Okay, so what you can see is that both coins have kind of done a similar, they look very similar, but one thing is different. Dogecoin is a little bit ahead of Injective, in my opinion. This is my opinion. So I would probably first put a horizontal here at this range, at the top of this range. So put that here on Injective and also put it on Doge, right? And then I would measure the movement from the top of the range to where Doge spiked. So that was a 16% move. And when we do the same on Injective, that is a 6% move. So that tells me that it is very likely, this is not guaranteed, but it is very likely that Injective has another 10% in it, right? So this is because in the realm of alternative coins, Dogecoin is more known. And traders who know all their coins say, well, they do exactly what I just said, right? I mean, they say this pump on Doge were too late for a short-term trade, not for a long-term trade, but for a short-term trade, maybe a couple of days, 3 days, I might want to focus more on injective. So this is something you could definitely do if you wanted to take that trade. You would take your long tool and say, if you were to enter that trade, I would definitely say it's invalidated if it goes below this horizontal that we have drawn. But I said there's another 10% in it. Okay, so that would mean here. So probably across here. So this is a 1 to 16 risk reward ratio, which is really not all that good. So it is, even for this trade here, a little bit too late. But had I looked at this maybe a few hours earlier, right, like here, then I think it would have been a trade that would have been worth taking. Because like this, it is a 2.56 risk reward. So everything is about timing and about understanding what to look for. This is why I'm telling you it takes a lot of time to do these things. You have to religiously wake up every morning and look at the charts and be ready when the situation presents itself, the opportunity presents itself. Very often, the difference between a successful trade and an unsuccessful trade is a matter of half an hour or an hour, right? So now I promised you that we would look at a way where I make cash flow income no matter what happens, because I don't always have the time to take these trades, and often enough I'm half an hour late or an hour late. And as a beginner trader, what you do is you still take the trade, right? That's what you do as a beginner trader, and then you lose money. You think like, oh, yeah, I'm half an hour late, but I can still do it. And that's what you need to stop doing, right? If you're too late, the trade opportunity is gone, and you need to know the market is going to give you a next opportunity, but you have to be up a little bit earlier. You have to look at your data a little bit earlier, right? Now, how do I take advantage of this situation where this happens? These market movements happen, okay? So we go from Bitcoin into altcoins, and then we go into stables. And each time this happens, there are transaction fees that occur, because that's just how marketplaces work. When you make a trade, there's transaction fees, also known as gas fees. And what I like to do is I like to, this is called liquidity provisioning, right? So I like to provide capital for this marketplace here and here when these trades happen. And then when these fees occur, when these trades are happening, these fees go to me. And that is known as liquidity provisioning. And that is what I'm going to teach on Monday, how I do this. I'm going to teach how this works. The great thing is that this works both ways, okay? And it also works in almost every phase of the market. And if you have time and patience, and you know a little bit what you're doing, it always works in your favor. Sometimes you have to protect yourself against what we call impermanent loss, which is when one side of the market that you provide liquidity for drops too fast in value. But you can do that with options. Okay, so this is a little bit more advanced. But yeah, that's it. Do you have any questions or comments? Put them in the chat right now. This is what I wanted to go over today. I definitely think that if you join my masterclass on Monday, you will be able to execute on that liquidity provisioning. So go to crypto.lifestyle, use the green button at the top, and then take advantage of learning how to live in cash flow in crypto. I still do all of those things. I enjoy trading as well. I really enjoy that. But I also enjoy being in a situation where no matter what happens, I benefit from others trading. Beautiful. I don't see any more questions. That means I've done a good job explaining. Thank you all for your time and participation. It's Wilfred is asking what time on Monday is going to be at 9 a.m. Central Time. So if you go to crypto.lifestyle and you register, there will be a calendar invite that is going to be emailed to you automatically, and you can import that to your calendar so you have the correct time in whatever time zone you are. Beautiful. Okay, that's it for today. Stay safe and stay curious. Learn a lot. This was Shankar Poncelet live from San Antonio, Texas. See you again on this platform very, very soon.